I'm just trying to find anomaly examples what Jim usually shares or calls an anomaly. He is looking at market development which is not smooth basically. All right. So for example, if you look at this particular day, there are these edges on the chart which are not very smooth, and whenever you have this kind of a development, markets will try and go back and repair those. But what I like to see is not some pattern that are developing on the charts. What I want to see is markets are expected to develop in a logical manner, and if they don't develop in a logical manner, and if they show a development which is not really in line with what they should be doing, that is what an anomaly is. Okay, and now I think I have example here. That's July 14th, and now here you can see an interesting behavior that market is showing. Okay, what it is trying to do is, first and foremost, obviously we had a P shape, then we had a spike which failed, we came back down, and then we again went down. And every time you can clearly see here is that after this day we did not go above the IB high here. No IB high have tagged on this day. On both these days we had multiple range extensions to the downside. Everything is what sellers expect to see in the market. But on this day you can see that we had an IB Rex to the upside. Now whenever sellers are in control, what we like to see first is that the value should keep developing in the direction of the trend. So in this case low. Second, if the trend is down, yesterday's low should be tagged. We should find acceptance below yesterday's low as soon as possible. Okay, that was happening. We tagged below this low, we also went below this low, we also went below this low. But what we also want to see is IB Rex happening in the direction of the trend, and then subsequent range extensions happening in the direction of the trend. If it does not happen, like on this day, you can see here there was no IB Rex, here there was no IB Rex, but then later on, like in E period and in C period, we did extend the range to the downside, and then we continued to move lower. But on this day we have IB Rex to the upside. Now if sellers are in control, why this IB Rex has happened to the upside? Or in other words, this is an anomaly that is left behind. And when you see this kind of behavior happening, you need to be cautious about what you are seeing in the market. So when we were seeing markets going lower, see continuous one time framing, this and that, what happens? Within a day or two we reverse and we start going back up. Now even if the market has to go lower, in this case, what the higher time frame or smart money would like to do is test about this particular anomaly. What is the reason? They want to find out who were the buyers who caused this. Now they might be short-term buyers, it might be short covering by sellers who sold in the hole. Everything is alright, but if they are from a shorter time frame, the smart money does not have to worry. If they are from a higher time frame and they are using lower prices to establish their positions, then the smart money needs to worry about this particular anomaly. And what they will do is they will try to take the markets above this anomaly. And if the market finds acceptance and continues higher, then they know that yes, this is caused not by shorter time frames but by higher time frames, which was the case in this particular example. The structural anomaly is like if it is left behind, market will come back in T plus 3 days to test it. This is the kind of mechanical system people are trying to sell, saying that they are designed based on market profile. This is hogwash. This is not correct, and you should not follow such things. Now there is one more interesting thing that we I don't know how we forgot, but you can clearly see here is that we are developing a slightly higher value area. We have taken out yesterday's high, but the IB Rex was down. So this is a great example of anomaly. If this remained inside of previous day's range, this anomaly won't mean much. But now that we are trying to break out from yesterday's high, we have made a new high, this anomaly is important. Now again, this is bad for buyers. So many signs are there that are indicating that trade facilitation by buyers is not good, but still we are one time framing higher and extending the range. You need to be careful.